Hi everyone, let's go over my bullish and bearish low time frame and medium time frame Elliott Wave scenarios on Bitcoin, starting with the low time frame bullish scenario where we were looking for a three-wave move towards the downside in an ABC that hit the most common target area for a wave C, after which we then expect a continuation back towards the upside, where this move over here is an impulsive structure in either a wave A or a wave 1, after which you then expect a retracement to the downside in three waves. That is important, where for me an interesting support area is going to be around the 786 at around 25.8k to 25.7k, because we also, besides the 786, have a daily naked point of control and a daily level, and we also have the previous range which can act as support. So this is a very interesting level for this scenario. The invalidation is at 25.3k. If price is going to drop and hit this level, then the bearish scenario might come into play. Now it is important to know the difference between an ABC and a 1, 2, 3, 4, 5. So if we do get a move down and then a move up, then a wave C tends to be a bit more lazy and sideways, and a wave 3 tends to be more parabolic and like more upward structure, with also the volume increasing massively in a wave 3, while in a wave C you expect the volume to be quite similar to wave A. Depending on price making an ABC or a 5-wave structure, we also get different medium time frame scenarios, and I quickly want to connect the potential low time frame scenarios over here with the medium time frame scenario. So if we get a potential ABC, there is two potential scenarios that come to mind. The first one is this one, a potential expanding flat in a wave Y in the medium time frame W, X, and then a 3-wave Y, where this wave A is already finished in a zigzag move, 535, grabbing the liquidity of these lows, something we were looking for a while now, and then moving to the upside. Now this wave B is also a 3-wave structure, so you then expect a 3-wave move in a wave B, and if the low of A is this wick over here, and this is the first structure, you can expect another potential ABC, or at least a 3-wave structure in a wave B, where you expect at least the high of wave X to be taken, and then an expanding flat A, B, and then a bigger C towards the downside. Another option is that if this wave B over here is going to retrace all the way around the 786 as mentioned just now, and then this wave C is going to not reach the highs of wave X, we might get a potential triangle, which is also a scenario in a wave Y. Now you expect a triangle to have 4 out of 5 zigzags minimum, and if one of those moves is not a zigzag, it's usually wave C or D. So this is then a zigzag in a wave A, you then expect another zigzag in a wave B. And in this scenario, it would be nice if this wave B, the wide count, and this being then A, B, C, is going to reach around the 786 area. And the reason why is because of the length of this wave C, because the target area of this wave C is going to be a trend-based fib taken from the low of A to the high of the wide A over here to then the low of the potential wave B. And if I quickly show you the target area for potentially this wide C, it is the 1 and the 1.236. That's the area, that's the most common target area for a wave C. Now if price would return where it is right now, you can see that it is actually quite likely, very likely, we're going to reach the invalidation of a triangle scenario, and then the scenario I've just shown you, the expanding flat, is going to be more likely. If price, however, is going to drop to around the 786 area, and I move the low of then this wave B to the downside to, let's say, the 786, then you can see that the 1-to-1 level is around the 786 here as well, for then maybe the high of wave C, and also the 1.236 is still below the invalidation of a triangle. So it is quite important for price to move further towards the downside for this triangle to have a higher probability. Now it's very early days, very hypothetical, but it's good to at least know that a triangle is an option in a wave Y, and as it stands now, it's not invalidated, and we also know there's some interesting support around that 786 area for then potentially a bounce to the upside, and we have to wait and see if it's then going to be a wave 3, or in this scenario again a potential ABC. If we then look at this scenario in a wave 1, 2, and then looking for a bigger 3 towards the upside, so an impulsive structure in a 1, 2, 3, 4, 5, then the medium time frame scenario that comes to mind is a wave X that is not yet finished. So then we have a zigzag in a wave W, followed by over here a wave A in 3 waves, 3 wave A, 3 wave B, and then we get an impulsive structure to the upside in a wave C. So it's an expanding flat in a wave X. And this wave B bounced perfectly inside the most common target area for a wave B expanding flat between the 1.236 and the 1.38, taken from the low of W, the red candle over here, so not the wick, the red candle, and then pull it to the high of A. And then you expect an impulsive structure where the most common target area for wave C is the white box over here between 29.1k and 30.4k. But by far my most interesting area or level basically inside this white box is the triple top that we have for maybe a liquidity grab, grabbing all the liquidity above the triple top over here and then return towards the downside in then a potential Y. So that's the one we're still looking for, right? So then X is finished, and then after X is finished, we expect a 3-wave move to the downside in a wave Y. So that is the consequences of what is going to happen with this move towards the upside. So actually what's happening on the lower time frames is very, very important for the medium time frame scenarios. And ABC can lead to a triangle or the expanding flat scenario, and a potential impulsive structure can lead to wave X and then looking for a Y down. If we then look towards the bearish scenario, the bearish scenario, yes, there is still a bearish scenario, of course, also has implications for the medium time frame scenario. So in this scenario, this is an ABC, yes, finished structure, but instead of the end of this ABC to the downside being this low, it's now one low to the left. And then this move towards the upside is a wave C, because I mentioned an impulsive structure after a move to the downside and then an impulse to the upside is either a wave 1, a wave A, or a wave C. In this scenario, it's a wave C, and then an A, B, C expanding flat scenario. The only problem I have, and therefore this is an alternative, is that this massive wave C went far beyond the already rare and usually maximum target of a wave C, which is the 2.618 taken from the low to the high of A to the low of B. So this wave C far extends the maximum and rare target of a wave C, making it extremely rare and therefore also very unlikely, but I still want to cover it because then this is a 3-wave structure followed by a 3-wave structure where potentially you can get an expanding flat ABC here as well. So then the lows could potentially be taken in this scenario for then eventually a B and then a C towards the upside. And what's interesting then is that this is again a 3-wave structure, A, B, C. The other 3-wave structure we have in mind is an A, B, C, but then not taking the low, right? So it's either then a zigzag or in this case an expanding flat, and both of these scenarios fit inside the expanding flat scenario over here, where this low time frame 3-3-5 wave scenario could then end up above this wave X over here for then the high of the blue B, and then we get that C towards the downside, right? If we then look at the CVD quickly, then we go to the AGGR chart over here. You can find the template and everything in my Discord as well. Now over here, what are we looking at? We had some bearish divergences. Now I just came back from Croatia. I literally just came home to make you guys this video, so I didn't really pay attention to what's been happening over here as I was traveling and flying and all that stuff. So we had some bearish divergences, lower highs on price, higher high on the CVD. Now this already played out, so one could say that CVD is neutralized very, very locally. If we zoom into the 5-minute, then we can see, not yet, we don't yet have bearish divergences over here, lower high on price, higher high on the CVD, not yet, but I mean, it's getting very close, so potentially some more downside expected. Again, we do have the 786 level down here, right? So if price goes down, that can still be very, very interesting. So we then have a move towards the downside, no bullish divergences here to be seen. No higher low on price and then a lower low on the CVD. Also the CVD is still quite high. So actually CVD is relatively neutral. That's what I'm trying to say. I'm not here trying to waste your time. I just need to get to the point here. So quite neutral. One could say there might be some like slight bullishness because we have a bit of a range over here. And then we have a higher low on price. And if you look at the yellow CVD, then it is getting very close or maybe already lower. So higher low on CVD. And if you look at my cursor line and I put it on the lows of this range, the yellow CVD line is creating like with little dots over here below. So lower low on CVD, higher low on price, but preferably you have a bullish CVD with the low over here. So a higher low on price and then a lower low on the CVD, but we're still far away from that. So we have to wait and see what happens there. But that is what I wanted to say in this video. I hope this video was helpful or valuable to you. Please check out my most recent educational update I've done about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.